Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for February 19th, 2023. I hope you guys and gals are having a great weekend. I hope you had a great week. You know, this last week was volatile, and we did have our CPI data. We had actually a lot of great data come out. The markets are still range bound, but we're really pushing against some pretty key levels, especially in the major markets like the S&P, the dollar index, bonds, yields. So there's a lot for us to talk about going into this next week because it is a shortened week. It's a President's Day weekend because I know you guys and gals in Tokyo are celebrating the U.S. President Day on Monday. Just kidding. But it's going to be a little bit lighter week on Monday to start off the week, but we still have a lot happening this next week that could really move the markets, especially the Fed's PCE data, which we'll talk about at the very, later on in the show. But before I do that, I just need to mention, if you haven't tried out Forex Analytics, try it out. $1 for 10 days. Jump in the most active community in the markets. This is the most active community. Plus, you get a technology platform, a mobile app. You can download it. You get all these notifications right to your phone, right to your fingertips. Try it out. It's $1 for 10 days. Download the mobile app when you do go on trial, and make sure you check out our chat room. Like I said, it's one of the most active communities in the markets. This is the platform. I'm actually not going to spend any time going over all of the specifics here, but make sure you keep an eye on the live squawk over here and our internal news flow from our analysts throughout the course of the day. These two tabs are very important for you when you're utilizing Forex Analytics. All right, I'm going to jump over to the charts, and I'm going to say this. We had to do a couple of things with our TradingView charts. If you're in Forex Analytics, you'll notice that our charts are powered by TradingView. Most of them are, but we had to do some account finagling with our team. Basically, had to move accounts and start with some fresh charts for most of us. So therefore, you have to bear with me because I'm going to be redrawing a few things, which is fine. I think it's fine because as we go through analysis, especially technical analysis, you being able to see me draw, certain things, certain trend lines, I think will make sense to you anyway. So, I want to start off with the S&P. And if you remember from a couple of weeks back, we were looking at this. This is a Gartley pattern setup, if you recall. Look, just like this, right? Just like this, and we really have struggled reaching for that resistance. Now we've also broken through channel resistance, which keeps it like a kind of a bullish undertone to the market anyway. And the thing about the market, I've got to say this. Stocks have held up really well. We talk about this during our daily shows. If you aren't in tune where our daily shows are, our free shows every day, the Flow Show, which is our European show that I'm sleeping during that show, but we have three of our analysts there. Then also the F.A.C.E show. That's the one where you're going to catch myself on and the rest of our team, and we talk about what's happening for the day. How we're kind of position, how we're looking to trade that session. Plus Dale Pinkert, our host, he brings in some great guests every single week. So make sure you register for those. The links are down in the description of this video. But if you've been around and you've been listening to our shows, you already know that we're kind of stalling at some pretty key levels of resistance here. And I'm like I was going to say, I'm a little nervous about the market because we've had really strong data. When I say strong data, CPI data was strong, non-farm payroll strong, producer prices were strong, retail sales was strong. All the strong data suggests that the Fed is going to keep rates higher for longer and maybe even move up that terminal rate, higher than the market expected. You would think that stocks would really come under pressure. They've really held up. And now I know there's been a lot of talk recently about the 0 days till expiration options. And that is really one of the things that's containing the market right now in such a tight range. Most people anticipate that we're going to break lower, but I don't. The problem is, in my opinion, is everybody believes that at the moment. And so, the more people that believe it, the chances of that happening might be a little bit more difficult. I personally, I think there's a risk that we challenge the, if you're looking at Fibonacci's from the all-time high to the low of last year, I think there's a chance that we reach up for the 618 retracement that is right here at 4307. And you can see it's also horizontal highs. Now, one of the reasons why I believe that is indeed possible moving forward is if you look at the dollar index has really stalled at a key level of resistance. Now, I'm going to talk about the dollar because, and I'm going to talk to you about how I traded the dollar. I actually traded really well last week until Friday. Friday, I stayed around in the dollar a little bit longer than I should have. And, it was Friday, the market continued to bleed. And so by the end of the day, I got out of my dollars and I was like, man, that stinks. I shouldn't have stuck around as long as I did. But what you'll notice in one of the charts and one of the developments we've seen, this week is that, the dollar index has this bull flag pattern, right? And that bull flag pattern, you'll notice, it continues, for a while. And, like I said, on Friday, I stuck around a little bit longer, ended up giving back some profits at the end of the week. Which is frustrating, but it happens to all of us, right? So at this time, am I bearish the dollar? No, but what we've done is we've actually pivoted from the 78% retracement of this most recent down leg. So I'm still constructive on the dollar. However, I do think that there's a risk that the dollar continues to pull back a little bit, at least near term. We might, early in the next week, we might drift down a little bit towards, 103.50 before resuming our uptrend. But that's kind of how I'm viewing the dollar right now. And remember, there's data this week that is going to move the dollar, and I don't want to dismiss that. One of the big pieces of data this week is going to be the PCE data that comes in on Friday. Remember, we got producer prices this week. We've got consumer prices this week, and the Fed's biggest gauge of inflation is going to be the PCE data. Having those components and being able to see those, there is a risk, and I'm sure expectations are now moving higher for PCE data this next week to come in hotter than expected. But should that happen, we might have a dollar that regains its uptrend. I don't think the dollar bullishness is over near term. I still think that the dollar has further to go. And when you look at currencies like the euro dollar, the euro bounced off of its 78% retracement as well. And you can see how we're bouncing back. But, the euro is going to be approaching the underside of a broken trend line. So when you're looking at an underside of a broken trend line, that might take us back to 107.60, maybe 107.75, maybe even as high as 108 before we turn back lower again. So I'm going to be looking for the euro to be selling rallies this next week as we go into next week. Remember, we closed about 107. So there's some leeway for the euro to continue to rally before it turns over again. Now, if you're looking at the cable, the cable's had this, this big long-term double top that's setting up, but we're still holding the neckline, which comes in right around the 118.50 is the lower end of this, the spike low from back here in January. But between 118.50 and 119 right here, that's going to be some pretty key levels of support for the sterling. And, the sterling, when you're at support, I always use analogies when I try to explain the markets and especially technical analysis. In this case, when you have a really strong floor, right, like you see here, you take a ball and you bounce it off of a table, right, and then it bounces, and then each bounce is a little less, and then what eventually happens when it falls off the side of the table, right? It drops like that. That's how I view the sterling and this big double top that's setting up. I believe that we are going to eventually break down. It's just going to be more of a matter of time. And like I said, I believe that the dollar still has further to go to the upside in the weeks and maybe even months ahead. So therefore, the cable, I am still looking to sell it on rallies, maybe a move back up towards 121, maybe move back up to 121.50 might be more of a place that I would look to situate fresh shorts in the market for myself. That's That's the way I'm viewing it right now as far as the cable goes. But if you look around, it's not just the euro. It's just not just the sterling. I mean, you take like the Aussie dollar. The Aussie dollar, and let me delete these really quick, and I want to show you something with the Aussie. Again, I'm doing a lot of redrawing today because I had to redraw a lot of my charts over the course of the last week. So this has been fairly common for me this week. I've been doing a lot of redrawing here. But if you notice the Aussie, the Aussie had and still has, by the way, a nice little channel that we were following. You can see that, channel looks something like this. We broke lower, and now any move back up towards 69.50 is probably going to offer some good opportunities to be on the short side of the Aussie. So that what I'm trying to say here is we might have a little bit more further upside before we resume that downward trend in the Aussie. But take a look, and just really quick, I want to show you just one last thing here with the Aussie dollar. You can see, we found support at the 618 retracement, which all of you should know, and if you're new, you're going to know now. The 618 retracement, and the reason why it's highlighted in red, for me, it's the golden fib. So whenever we're near a 618 retracement, I start to pay really close attention. I should have adhered to that more on Friday, because Friday I'm like, we're bouncing from there. I'm just going to sell a bounce into Friday. And then, the bounce just kept going, of course, so I should have adhered more to that warning, but I knew it was at the 618. I just, I was trying to play the dollar continuously long, but as you can see, we bounced off key levels of support here. Now, if you look at the you look at the Kiwi. The Kiwi is another very interesting pair this week. And the reason why it's going to be so interesting this week, if you did not know, the RBNZ is this week. Now, if you're looking at this just at the daily chart, this is a weekly chart. I'm sorry. Here's the daily chart. A couple really important things that has happened on a weekly chart is that we had this ascending channel. Let me go ahead and move that. Okay. We had this ascending channel in the Kiwi, and actually it's probably better drawn, look like this. Let's go over to a 4-hour chart. It's going to be a little bit easier to see. Let me go ahead and redraw. Clone that. I was looking at it like this, but you can look at it a couple of different ways. This week, we do have the RBNZ rate decision, right? And you can see how we're just kind of hovering around some pretty key levels of support. Now, the market is expecting the RBNZ to raise rates by 0.5%, but they also expect that, and remember, this is expected. The market already knows this. That's one of the reasons why the Kiwi has been very well supported, at this time. But if the RBNZ really suggests that their path of rate hikes is over, at least near term, there could be some risk that we break through some major levels of support. So what I'm going to be looking for on Tuesday, well, it's actually Wednesday morning in New Zealand, but also Tuesday evening, and if you live in North America, is really the 62-cent level in the Kiwi. Because if that breaks, that means that we are looking for an extended move lower, maybe towards 61 cents, maybe even as low as 60 cents in the days ahead. So watch the Kiwi. Below 62 cents would be extremely bearish for the Kiwi dollar post RBNZ this next week. You know what else is happening this next week? And then I'm going to move on to some indexes. I've got a couple last currencies to show you. I'm going to show you the dollar Canadian. One of the reasons why the dollar Canadian is going to be very important for us to watch is next week, Canada has their CPI data. So, data that's obviously moving the currencies right now is inflation data. We saw how big of a move that it had in the stock market and in currencies, and it's going to be the same for Canada. But you notice the dollar Canadian. And let me just go ahead and draw this out for you guys. The dollar Canadian, we've developed a pretty good wedge. You can see the rejection here in the dollar CAD. Pretty key level of resistance. What that actually means to me now going into next week is you'll see right here, this resistance is, let me just highlight it, 135.40. That is the 618 retracement. Oh, wow. That's weird. It's the 618 retracement again. Isn't that weird that I have it highlighted in red and it seems like the market respects that a lot? Hey, maybe that you should be looking at that too. Yeah, I know. So what that means going in this next week is a break above 135.40 would be extremely bullish. Now, remember, CPI data is coming out next week, and CPI data is coming out Tuesday morning. We will be covering this live on the F.A.C.E show. So let me go ahead and just refresh your memory. If you don't know where to find the F.A.C.E show, the one that we do live every day with our team, the link is in the description of this video, or you can get to it on the forexanalytics.com website /webinars. You can get to that and register right here for that free show. Now, if the inflation data comes in a little bit weak for whatever reason, which I'm not expecting, but should it, that's the thing that we have to look at with data. This whole market is data dependent. Every country right now, every central bank is data dependent. So a surprise from expectations, an outsized surprise, whether it's higher or lower, above or below expectations, is going to move the market quite aggressively. So when you match that idea up with the data that's the market's most focused on, which happens to be inflation data right now, because the question that we have is, from current levels, is inflation going to continue to drift lower globally, or are we going to start to see a spike higher in inflation globally, and we're going to start to see it resume its uptrend? It's out for debate, but I think everybody's focused on that. So based on what I'm telling you right now, is if the dollar Canadian breaks above this 134.40 or 135.40 level, it's going to be extremely, extremely bearish or bullish. Bearish Canadian dollar, bullish dollar Canadian. Flip side to that is, in the event that we get some strong Canadian inflation data, there's a lot of room to the downside for a move back towards 132, 132.50. So I think you got to go into this next week with a pretty open open mind, especially if you're trading any of the Canadian pairs. All right, one of the last currencies I wanted to bring up this week is I wanted to talk about the U.S. dollar Japanese yen. The U.S. dollar Japanese yen has been a really nice move higher. You can, let's go more intraday here. Let me go ahead and resize that. The thing about the dollar yen is we've had this nice, flag pattern move. You can see it looks something like this, right? And what you're also going to notice is the flag pattern has completed. All right, that means we've completed our pattern, and the question that you're going to be asking is, well, if it completed, is it finished? And the answer to that question is, I'm not too sure about that. Remember, we have a new Bank of Japan governor who will be coming in to take Kuroda's spot. And a lot of people are going to be listening to what Ueda says about monetary policy. I still think there is a risk that the dollar yen can make it up to the 200-day moving average, which will be around 137, 136 yen. Those are levels that I'm going to be looking for a possible short for the U.S. dollar Japanese yen. And I've made this point on our daily shows, and I'm going to make the point here on the week ahead video. Politicians, central bank governors, CEOs, potential CEOs, whoever is looking for one of those jobs, they're going to say whatever they want to please the constituents and putting them in that position. Once they're in the position, whether it's a politician, whether it's a Bank of Japan governor, Fed chairman, whatever, what's most important from there is their actions. Actions speak louder than words, but right now their words are speaking, so that's what we're gauging all that upon. I will say this, that the new incoming Bank of Japan governor probably will not be as extreme, more than likely, as BOJ current governor Kuroda. And as a result, that should lead to some yen strength following the next few weeks. So that's why I'm looking for the dollar yen to eventually roll over into playing into yen strength, dollar, euro, sterling, whatever else you want to play against the yen, that type of weakness. That's what I'm looking to do. Whether it happens or not, we'll find out. But my plan of action right now is to look for a move to the 38% retracement to start selling, or excuse me, buying yen, selling dollar yen, or selling other yen pairs, buying yen. You know, when we trade, we plan our trades and we trade our plan. That's usually the best way to go about trading the markets, and that's my plan. And that's how I'm going to be trading the markets over the next couple of weeks. So as you watch these week ahead videos, as you watch our daily shows that are free, that's what you're going to be hearing from myself. Speaking of free, you know what else is free is our blogs. Go check out our blogs because we've been posting a lot here. Check out this blog post right here about the Trader Funding Program. This blog post was posted by us, but it was actually made by Nick, who has been a trader of and supporter of Forex Analytics. And this is Nick of Jupiter and his video that he put together on how he passed the Trader Funding Program. So go to our blogs, check that video out. You can find the link in the description down below. Make sure you're checking that out when you can. All right, let's continue on with analysis. A couple other things I wanted to cover outside of currencies. I want to talk about gold because gold has been a huge mover the last couple of weeks. I've been on the short side of gold. I've been looking for a short. We've had this bear flag pattern, which, by the way, is not complete yet, just so you all know. The bear flag pattern, as I'm roughly drawing it for you here, is not complete yet, but let me give you the buts. I like big butts, and no, you don't want to hear me sing that. I'm gonna give you this just because I think it's rather important when you look at gold, and you're like, well, can gold go lower? I still believe gold can go lower, but one of the reasons why gold has stopped moving lower is it hit the 618 retracement. That's so weird. That's so weird. It hit that and it bounced. Yeah. Well, didn't imagine that happening. Yeah, I hit the 618 retracement this week on Thursday, and then we saw a bounce on Friday. One of the things that I should have been listening more to when I was trading the dollar on Friday, but gold bounced. As gold bounces, the dollar pulls back, and that's exactly what we saw. Last thing I want to show you is yields, and I want to talk about the bond market because the bond market. Well, that's weird. It hit the 618 retrace, and it's been bouncing from there. Huh. Weird. Okay, so as you can see, the bond market is bouncing from the 618 retracement, and also it might have created a false breakdown. And so you got to be mindful of that going into this next week, because if we held the 618 and we also had a false breakdown, there is a risk that it's catching some people on the short side of bonds that were chasing yields higher, and we might get a little bounce in the bond market. Yields might come off and the dollar might pull back. So to sum it all up for you guys, look, the dollar index, it's been on a rampage. I think there's a good chance that we do pull back early in the next week. We do have some, in my opinion, we have some, key data that's coming out next week. We have the Canadian CPI. We have the inflation. I just said that CPI data out of Canada. We have the RBNZ. Also Wednesday morning, if you live in New Zealand, we have the FOMC meeting minutes, which is going to be very important. By the way, that happens on Wednesday. Yeah, I just wanted to double check that. I had to look at the schedule. Wednesday at noon Eastern, we're going to have the FOMC meeting minutes. Now, remember, this is not the FOMC meeting. This is when it was written down for their minutes. So we're going to get a little bit better color on how that terminal rate might be looking. But remember, because of the data that we just got over the last 2 weeks, those expectations could be shifting a little bit. But we're gonna get the meeting minutes, and we're gonna see how hawkish these regional Fed governors really are. Also, we have U.S. GDP that happens on Thursday. It's preliminary GDP, so we don't have all the data for the final GDP, obviously, but it's an early look to see how the U.S. economy is faring. And then also we have the PCE data on Friday, which is going to definitely be a market mover. So next week, if you guys thought it was going to be a chill week and we're just going to kick back, relax, sit on the beach, look, it's going to be volatile, and that's good because as traders, that's what you and I love, right? So I want to thank you all. I know there's been a bit of a longer video than normal, but I appreciate all of you spending your time with me this week. Make sure you give a thumbs up to the team for producing this every single week. Subscribe to the channel. It's free to do so. And I hope you have a great remainder of your weekend. I will see you Monday morning on the F.A.C.E Show. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.